to another member town hall coming in you from a new time slot, Friday night, for those watching in Australia. Thought, as I said last week, we'll try a new time slot to get more questions live from members. We know everyone's busy, and doing it out of business hours now is going to be our approach. So thank you everyone for leaving that feedback. Got a lot to get through as always. For those of you watching on YouTube or listening on the podcast, thank you for supporting the Collective Shift channel, and always a reminder that to learn more about our membership offering, you can go to collectiveshift.io to learn more about what we do. And we also have a 15-minute free strategy call as well for those of you wanting to learn more about Collective Shift. All right, we'll get into a lot of things, starting as always with our market recap. For those members watching live, another reminder that we do save time for member questions towards the end of every town hall. So pop in those questions in the comments, and we'll keep an eye on them throughout the town hall. The banking crisis, a lot of updates there, still very relevant. And we got some more enforcement action from the US, as well as some more news about some altcoins that we've been monitoring, with some major updates coming up. So yeah, just to kick things off with a bit of an update on prices. I think BTC is up on the week, as well as ETH. Oh no, it's actually fallen a bit today. So down 1% BTC, and ETH is down 2.5%. Still got that overall market cap at about 1.2 trillion. So a bit of consolidation after, what was several weeks of upwards price action. And it's looking like March is going to end as another green month. So for Bitcoin, that would mean that we've had 3 consecutive months of some gains there to start off 2023, which is always nice. Just finishing up here with the market update. Biggest thing you probably missed that sort of drove markets last week and prices was from the Federal Reserve, the US central bank, increase their policy rate or interest rates by 25 basis points. That was as expected. We were all sort of watching what's their commentary going to be with respect to how they deal with financial stability and their goal of getting inflation down. Trying to balance that with the worries about the banking crisis. They essentially came out and signaled that they're going to try to keep rates higher for longer, at least with the information at hand. That, as always, they said they'd be reacting. If there was any more crisis related news, that would obviously affect their decision making. But we saw the markets really pricing in a lot of 2 to 3 cuts of interest rates going into that meeting, and I think that's now been a less aggressive sort of expectation from the markets. So any sort of word?
Yeah, I kind of expected this kind of outcome because we saw the banking crisis unfold in a matter of days, right? Silvergate and so forth. So when they take their foot off the pedal, you're going to think that they don't want to come across that they're completely stopping rate hikes. So the best thing for them in their mind, and I can see that, is to keep it going just very slowly with 25 basis point hikes. They won't ever go up to 50 basis points now, in my opinion. So I think we're just going to see them slowly go up, and maybe when they see the inflation curve start going down, they'll be like, okay, we've done our jobs, because they did vocalize that they don't want to stop preemptively. In the olden days, they used to go really hard and say you have to beat inflation, you have to go super hard. So I think for now, I totally expect this. And of course, we expected this. The markets did rally a little bit, but that doesn't mean the banks still can't go down. If they keep increasing interest rates, some banks will still be at risk. And then the question is, who's going to get bailed out next? And hopefully they don't use customer funds to bail them out. Nick, what do you think, mate?
I sort of agree. It's really interesting considering that they've hiked. They've obviously had the highest or the lowest rate decreases in history, and now you're having the highest rate increases in history still. So it's it's all about the wording and how they're going to respond. I had this discussion with Matt actually earlier in the day. We were meeting up for a content strategy session, and we sort of agreed that actually that we're contrasting, because I said that the Fed has been really poor in, I guess, understanding the situation so far. They said that they weren't worried about inflation, but that proved out to be an issue. And then they said that they sort of were late to the party to raise rates, which was a sort of a wrong error as well. So they said they want to keep rates high, but it's all depending on the external situation.
Yeah, I totally remember transitory. If anyone else remembers that, and if anyone believed that, transitory interest rates, interest rates, no, not happening. And so it stuck around for a while. So I think that, yeah, they are a little bit behind the curveball. And I totally agree with what you said.
Yeah, for sure. So just on that banking crisis, it's continued this time, in the last week. Biggest update for sure was the failure failure of Credit Suisse. So that was actually the first globally systemically important bank, or GSIB. That was the first one to fail since 2008. So again, it was acquired by basically a competitor in Switzerland. So yeah, I don't know, call it a collapse, failure, whatever. It's significantly discounted from over the past decade, as many would have noticed. Credit Suisse was all over the news in that Archegos sort of news that came out, I think at the start of COVID maybe, and they were caught up in a lot of sort of fraud and had to pay fines on significant fines. Basically every year it seemed something else to do with Credit Suisse would come out. So their share price had been performing really poorly over the last decade, and it's now been brought out. So, more signs there of just unrest in the banking sector. And then, we've got a bit more on just regional banks now. I might let you talk a bit more.
I think these are still, because the big issue is when you had the bailout, not the bailouts, but because they're not calling it a bailout, but you had government stepping in to help and backstop some of these banks and deposits. A lot of these smaller banks are really pressing the Treasury and Federal Reserve to open up more assistance to them, because they're most at risk if they see a lot of their deposits flee. So yeah, I think they had a lot of meetings with a lot of regional banks to decide and pressure government to give them better support and guarantees on the deposits. I think they're actually campaigning for full guarantees of deposits for these smaller banks. So it's going to be really big to see whether they do provide widespread support for these banks. A lot of pressure there. So I think it's just still a wait and see. And I think Treasury Secretary Treasury Secretary Yellen said that they had an emergency meeting. So that's going to be big in terms of the measures they unload there. If it's going to be super easy money for to backstop all of these banks. So I think it's a wait and see, and maybe we got more info next week.
Just a counter on that, we were hearing the rumors before that this is a whole plan, tinfoil hat on. This is all a plan to get all the money from the regional banks into the larger, big four banks in America. So if they go ahead and guarantee all of these regional banks, then that kind of puts a hole in that plan. So people aren't going to be moving from the regional banks into the large banks. But I generally agree that the government wants the large banks to handle it, and they don't want any of the regional banks. So this kind of two plans are contradictory to each other. Yes, as you said, we'll probably have to wait and see. But if the regional banks become insured 100%, then you're not going anywhere. If your money's fine there, you're not going to go to the big bank, and then they lose out at the end of the day.
Yeah, for sure. I think the US is sort of unique in the sense it has such a vast market of banks. I think they've got maybe over 4,000 or over 6,000 banks. It used to be up towards 20 or 30,000. They've been consolidating basically significantly in the past decade. But if you look at Australia and a lot of other developed nations, it's more like an oligopoly. But the US is really had this system of trying to preserve the regional banks, but it's sort of been trending towards weakening. So it's I don't know, just interesting to see how it works. It's also sort of when you're talking conspiracies, it's also a bit relevant, you could argue, towards CBDCs and things like that. I think there's a lot of pushback from like smaller banks and regional banks, and CBDCs would be a lot easier to implement in theory.
If you had 4 banks to control
sort of CBDCs, if the banking sector was a lot more consolidated. So we'll just monitor this space, and more relevant, I guess, in the short term is really just if any of the more of these fall and collapse, it will probably be bullish for Bitcoin in my opinion, but it will probably lead to more volatility, just in all financial markets really. All right, too easy. The next one, watch this space, and then biggest news by far, I think, in the crypto market the last week was the filing or news out of the US, out of Coinbase, that they received a Wells notice from the securities sort of agency, such the SEC in the US. A Wells notice is sort of like a document that typically like precedes sort of like law, like a legal action. It's everyone's now talking about, what could this like legal action or enforcement action be? It's probably I think most people are sort of thinking it's going to have to do with like Coinbase's staking products, and maybe some to do with like them listing like selling unregistered securities. So time will tell, I suppose, on that case. But like, why was it so significant? It's really just to do with Coinbase being like the poster child really of like crypto. Like in the US, sort of crypto and Coinbase are kind of synonymous, interchangeable, for better or worse. Nick, I know you've been following this one.
Yeah, it's really significant because it means there may be finally some clarity that's going to happen, because at the moment, government hasn't stepped in to provide any clarity and provide any laws, but there is the branch of the courts which then can enforce and create law. So this is going to be massive, because Coinbase has already said that they're going to fight this if it comes to it. So I think we can expect maybe in the coming month a formal bit of bill that comes in terms of like the SEC pressuring and formally putting charges against Coinbase, which then will set the stage for massive multi-year court case, which could define what is cryptocurrency securities, what is cryptocurrency, where does cryptocurrency stand in the law? Because it's been clear from Coinbase's angle that the SEC hasn't given proper guidance, but of course the SEC is saying that they have given all the guidance necessary. So it's shaping up just to be massive case when it happens, because I think everyone's sort of backing Coinbase in here, because I think everybody just wants greater clarity in the industry.
I do love that Coinbase decided to sue them back and say, hey guys, we've been operating since 2011. What has taken so long for you guys to start coming after us? I just love that mentality. And I totally agree that this might set the foundation or the groundwork, at least, for more clearer definitions on what we can offer, what we can't offer, what is a security, what isn't a security. So yeah, I think it's great. I actually want to see the entire American crypto industry come together, not just Coinbase, Kraken, all the other big guys that have been there for a while. They go all in and say, yes, this is our foundational ruling to say we're all here. We all want to be a part of this. And then, kick back the XSC, because they haven't been, according to the crypto people, they haven't been doing their job properly, or they haven't been giving us the right guidance on being safe and legal in America. So I just love it that they're all ganging up on SEC now. I hope they do.
And, yeah, it's interesting because Coinbase has, they were the biggest public crypto company, to IPO, and apparently they've had probably, I think, a few meetings a month with the SEC in regards to their products and what they're doing. So Coinbase has actually come out and tried to engage with them. But I think that's what the issue is now. They're even saying that how can you issue this notice when we don't even know where we're going wrong?
Yeah, so we've been talking with you every week.
Apparently, they're meant to give you the chance to defend yourself against possible action. So yeah, really important case though, because the government at the moment in the US is very split. And it doesn't look like at the moment there's going to be clarity anytime soon.
Yeah, it's kind of just telling of like the state of how things are, I suppose, for crypto companies, as we've been talking about for basically a year now, really. Just, things are getting pretty hard for crypto startups in the US. And this all sort of, kind of comes around to just like general market sentiment on crypto, for lack it or not. US is like, the one that everyone follows still. And, it kind of impacts greatly crypto prices because it affects the outlook for the market. So, we've got, I think a big thing there. I think Coinbase did say like 30 times, I think they met with the SEC in the last year. So that's like,
like from the crypto project's perspective, like isn't that just wasted time and effort if you end up getting sued in the last place? So why would anyone decide to stay in America and try and deal with the SEC? Like it just seems like wasted effort.
Certainly. I think that would be like the sentiment. So, and the big other thing was that the SEC, like, again, like didn't really push back when Coinbase like went public via direct listing. They didn't do an IPO, but still, to be able to go public, you need to be ticked off by the SEC. And in their filing, I think they said all their thing about how their staking program works and how they go about choosing assets, and the SEC didn't really push back then. So it's kind of like why now, and why is all of a sudden the SEC just like basically stopped working with Coinbase on their ongoing sort of meetings that Coinbase was paying off out of their own coffers, really, for the betterment of the industry. So it's going to be interesting to see like what this actual allegations that the SEC brings forward are, which we don't really know yet. But this will be like the biggest case like to follow amongst like Ripple versus SEC is another big one, and Grayscale versus SEC, which as Nick covered, I think in a recent town hall, SEC was sort of like, it was, the consensus was that the SEC like wasn't really doing a great job in that case, trying to the judge and the sort of not jury, but forgot the term, sort of were picking apart the SEC's arguments and whatnot. So look, this is really where we've come to, like at least in the US, in terms of like these sort of, it's going to look like it's going through case law, really, like setting precedents, given that they've been so slow to sort of make actual legislation. But none of it's really going to be binding, but it will be heavily influential on how
we also saw
legislation.
I think it was Sushi that got enforcement action as well. So it's not just exclusively to Coinbase. We've seen an acceleration of the SEC targeting crypto, companies, and in this case, Sushi's a DAO now officially. So that was a massive one that they have to respond now. Whether more DAOs are targeted would be really interesting. There was an Uki case DAO, which is another cryptocurrency project which is being sued by the Commodities Commission. So we're seeing huge enforcement here. Even their big names like Justin Sun, a lot of his projects were targeted by the SEC, and of course the White House issued a very bearish report or briefing, basically saying that crypto didn't have much to offer, didn't have anything to offer, and really targeted home. And I think we all know their stance by now, but really solidifies this environment that we're seeing for cryptocurrency in the US.
It was a few days ago, I think, that's we'll link to it below. I think that was maybe 40 pages or so on crypto, and it was mostly just the same sort of message overall, and that same takeaway. And then it's probably similar on while we're on sort of just legal or regulatory updates. There was just quick news here that like the Terra founder or co-founder was finally arrested after being on the loose for a number of months. So that's Do Kwon, and I don't know, I suppose it'll just continue to follow that for updates. But he's been out of the picture for a while now, and I think hopefully all all the details and justice is served in that one.
I'm very surprised they actually ended up getting him, because it's been a while since Terra and 3AC kind of started, right?
Yeah.
So yeah, it just means that the regulators and lawmakers are still out there. They still have the books. They'll get to you sometime. So no matter where you run, they might end up getting you.
Yeah, for sure. I know there was like in probably eye-catching news, in the last week. Another one that was generating a lot of discussion was this, this essentially a bet or prediction by the Earn.com founder, Balaji. I'm not going to attempt to pronounce his last name, but he predicted that the price of Bitcoin will go to 1 million.
He said in 90 days. He basically just made the claim of hyperinflation and that Bitcoin is going to soar in the coming months.
I don't really have too much to say. Like, it was in the news, so people might be thinking like, what, like, is this going to happen? I don't know. I don't
think anybody thinks it's. I think it's obviously like a strong. Like Balaji is a very wealthy guy, so he has been in the game a long time. To put up $1 million to prove a point, maybe to just raise awareness of the situation, because he's very bearish. He reckons that there's going to be a lot of, I think, political instability as well. He basically was telling people to get out the USA. Actually, I saw in a few talks he was giving. So he's very serious. He actually moved to Singapore, had a look, and he's already out the US technically. So he's already fled, but he's still I think on the US business. But I sort of believe there is something to it in terms of his directional prediction, that he's probably very bearish on the way things are going at the moment in the US banking system. And he thinks that Bitcoin long term is going to be this thing that can help protect people from inflation if things continue to not improve in the US. So I think directionally it makes sense in his arguments, because a lot of people may be confused exactly about what he's saying when he's saying Bitcoin's going to go to $1 million and there's going to be hyperinflation. Yeah, in the most simplest form, he's just saying that the amount of debt at the moment accrued in the US is unsustainable, and basically someone's going to have to pay it one day. And he's saying with the rise of banks that are failing, that there's actually not enough money backstopped to support a lot of the insurance that is being given to people that are leaving their money in banks. I think it's actually only 1% of money is in the insurance fund, which backstops people's money, if there is a banking collapse. So he's saying that if that happens and the worst happens and we see more bank runs, that the US is in a place where they will just have to issue more government debt and put more money in the system to bail people out and provide that assistance. And that's only going to increase inflation and money in the system, as we saw with COVID. So at the very simplest phrasing, that's what he thinks is going to happen, and why I think he's so bullish on Bitcoin as a sort of an alternative asset.
I managed to catch some of his speaking engagements as well, and I got to say, he does have a way with words. He seems to convince you that the US dollar is going through this hyperinflationary stage at the moment due to debt. I don't quite think it's hyperinflationary, at least not in the next 90 days for us to go to $1 million. No way. Yes, I do agree directionally. We are going to $1 million, but it's not in the next 90 days. It's going to be maybe 1 year, 2 years, 3 years, maybe even 10 years, not anytime soon. Secondly, it is kind of marketing a little bit. He put up a bet, and for, what was it, $1,000 or something like that? He said $1,000, give us your best charts, and all these people start posting on his Twitter, and a self-fulfilling prophecy. Everyone's like, oh yeah, we think it's going to go to $1 million. Everyone buys it's going to go to $1 million. So it is a little bit of marketing, a little bit of self-fulfilling prophecy. But I personally don't think we're going to 1 million in the next 90 days. No way. Not with the current market status as it is now, and not with the way that the actual ecosystem is yet. And we're not even there. We're going to lose all our banks very, very soon, and we'll need to strap down and survive the winter. Yeah, I don't think we're getting there.
Yeah.
Yes, yeah, spot on. I think as we sort of wrap things up, I did see Tim member commenting there that that's normally a top signal, these sorts of news, and yeah, that was that's a good point. I wasn't sure if I should be selling when I saw that news, but no, I think still a long way to go. But good idea.
Yeah, sort of. Yeah, it's always good.
What's typically a top signal. I think that's one thing I personally need to do better at.
It would be applicable if we were at anywhere near the tops, if we were at 60k Australian dollars, but we're not there yet. We're still like a little bit in the bear market, maybe a local top possibly, but I totally get your idea. Like top signal is like Kramer or something. Kramer, yeah, Jim Kramer. On TV talking like no, come on guys.
Yeah.
I think Kramer actually come out and said something good for us if that's how he intended. I think he said that.
Oh no,
again.
I don't know how to feel about this. I need the inverse Kramer ETF now.
No. But yes, moving on to the Nasdaq coming up as well in the last week or so. I think on Friday, Bloomberg reported that Nasdaq, so the company behind really big exchange in the States, is aiming to debut its crypto custody services by the end of June. So they've said the vice president here told Bloomberg that Bloomberg is working on getting the necessary infrastructure and regulatory approval in place. They applied to the New York regulator for a limited purpose trust company charter, which would oversee this sort of custody service. So yeah, it's good to see another sort of trusted name, like not in the crypto space, still looking to get involved. We've talked a few weeks ago, like over recent weeks, about continued adoption by like Starbucks in NFTs, and even Fidelity, I think, launched their retail app after building it for quite some time. So yeah, it's more adoption there. I think you've got another one to cover, Nick. In terms
this one was more on the rumor mill. We'll put this one in the rumor mill. But Microsoft, according to The Verge, is potentially building in cryptocurrency wallet into the Edge browser. Would be super interesting to see if they do ship it, just because it's a signal that there's obviously demand for in browser wallets. Which if Microsoft enters the game, depends on what type of wallet they use, if they create their own, if they're just supporting external wallets more easily. I think that would be really big once we see it, if that is indeed true, because, Microsoft, huge name, and would be super validating if they were actually providing their own custom support.
I agree. There would be lots of good users coming from that. I went around and tried to look at any browser-based wallets at the moment. I've been using Brave Wallet. If anyone's been using Brave Wallet themselves, it is actually really, really good. And if the Brave Wallet is this fine, I'm not going to touch Microsoft Edge or the Microsoft Edge wallet. I'm just happy not to even go near Edge anymore, because they've probably lost me as a customer until something like significant really, really happens. So I wonder, have you guys used the Brave Wallet at all?
I made a wallet a while ago. It was all right. I didn't really use it too much though.
It's so smooth, actually a lot smoother than MetaMask. Loads much quicker. It integrates Solana, non-EVM chains. I just kind of wanted to bring it up because I liked it while we're talking about wallets.
Yeah, no, a lot of development in wallet tank, user experience.
I actually like a Coinbase wallet. If we talk wallets, that's probably my favorite actually, that I've been using a lot more. And I recommend to anybody who wants to trial crypto out or something, or I always tell them, don't use MetaMask, go Coinbase wallet, because it's just a way better experience. And it's being widely adopted now by anyone who's creating a crypto dApp now.
Yeah, sounds good. I'll check it out. I'll get a Coinbase account.
Yeah, cool.
It's just a web browser. It's just like your MetaMask. You just download the extension and you're in. They actually provide easier. So they provide support for Solana as well. You're a Solana guy, so easy.
Awesome. Good to know. I don't have to have an account.
Nice. Yeah, speaking of some sort of other networks and other altcoins, we'd see in the last week, I think zkSync, came out with an update about their mainnet. Is sort of set to go live pretty soon. That's coming basically at the same time as Polygon's expected to launch its zk EVM on Monday, Eastern, like US time. So yeah, it's sort of a big sort of month for zk EVMs, or even just zero knowledge sort of rollups in general, which we've been covering over the past year, and expect to hear a lot more sort of about them in well, definitely the coming years, but especially for the rest of 2023. Also had quite a major partnership with Immutable X and Polygon. I know you're focusing, Nick, a lot more on gaming than myself, so I might let you.
Yeah, it was awesome bit of news that I had a look at it as I dove deeper, listened to a few more podcasts, and really got to the heart of the announcement. It's just two cryptocurrency platforms that you initially think are competitors, but they're coming together to scale, I guess, gaming that's backed by Ethereum. So Immutable X is the gaming platform. They're sort of a hub. And then you have Polygon, who are more of the infrastructure. So they're kind of really compatible in that way, because Polygon's going to provide the infrastructure and the core technology, and Immutable X is providing the gaming partnerships and the platform and to bring it all together. So this hopefully will make Ethereum a real center for gaming, especially crypto gaming and all these Web3 games that are going to happen. A lot are launching on Immutable X, and it just means that you're going to get greater amount of scaling. If you're creating these games that you originally couldn't do on Polygon at the moment, because Polygon still is very centralized and it's still very slow compared to other platforms like Solana, or in an ideal world, what these platforms are going to be in 2 years. So massive partnership. Hopefully we can see this, I think, start to ship by the end of the year. But I think a key takeaway is that Matic, the token, will actually be used as a sort of staking and network token as well. And that's what sort of Matic's getting out of this. And of course, Immutable X is getting the core Polygon technology and partnerships that you get with them.
Yeah, absolutely. Exciting stuff. And gaming, yeah, again, that was a big developer conference that wasn't for crypto gaming. It was just for gaming overall. And it was exciting last week to see that announced as part of that, or at the same time, at least, as that conference. And, I think this week, it's all about, metaverse fashion. I think Metaverse Fashion Week is this week, which is sort of separate. But again, gaming, metaverse, most funding by far in 2022. Expect to hear just a lot more about it in the months ahead. And then, sticking with altcoins and other sort of blockchains, we saw Avalanche struggle a bit with sort of, degraded performance, or at least of one of its blockchains. So for those unaware, Avalanche, I think, has 3 blockchains. Blockchains already weren't confusing enough. It has C chain, X chain, and P chain from memory. And I think C chain is the one that's kind of like the one that's on MetaMask, and it's the one that's like sort of supports Ethereum, sort of smart contracts, or Ethereum, the same sort of style of smart contracts. And then I think that was the one, the C chain, that sort of had a bit of issues. It's similar to Solana, Solana's recent issues. I think it was more to do with like nodes and like updating the recent like software. These sort of modern sort of blockchains, basically ones that aren't Ethereum and aren't Bitcoin, they tend to sort of prefer sort of they tend to prioritize liveness over safety, whereas Bitcoin and Ethereum, they tend to prefer safety over liveness. It just basically means that, hey, when all the nodes like can't agree on like what the upcoming block is, basically Cosmos, like ones like Cosmos, like Avalanche, Solana, they're a lot more, the likelihood of them sort of like stopping and halting is like a lot more higher than something like Bitcoin and Ethereum, which essentially is always prioritizing just keeping the chain running, even if it means, so prioritizing liveness. Like basically, no matter the risk of like potential forks, like they're always going to just continue to prefer that that's the best case scenario, even though it's more vulnerable to attacks. So again, like it's just ultimately the takeaway really is these alternative blockchains just extremely hard to create one that's like has 100% uptime. And you know, even like Polygon, and even we saw issues last week with Arbitrum, like again, not really at the actual like block producing level, but more just like infrastructure related. Things are still like pretty clunky out there, and we do say it, maybe not enough, but blockchain is just still experimental, like until it hits mass adoption. And that's why like crypto is like, you know, extremely risky to invest in. And because we don't really know if these like a permissionless public blockchain can scale, like we don't know that yet to the masses. And while we figure that out, blockchains like Avalanche and Solana are sort of demonstrating this, that there will be some issues from time to time in terms of just maintaining liveness and safety. So I don't know, Nick, if you like.
I just looked at it in terms of the grand scheme of what Avalanche brings to the table, I guess. They receive tons of interest in the bull market. I just keep, the one thing with Avalanche I'm always questioning is what purpose do they serve in the industry in terms of users? What's their niche? Like, why is Avalanche potentially better than anything else out there? So that's going to be interesting to see if they do provide sort of a niche in the market or have a real use case for its blockchain. Because as we see with zkSync going live and things like Polygon starting to shake off their centralization and start to become more ingrained with Ethereum officially, where does this sit with Avalanche, which I'm kind of not seeing where Avalanche fits, and I feel like they're really behind the 8 ball in terms of gaining adoption.
Yeah, I put Avalanche in the same context as some of the other alt L ones, where they're just trying to carve out their own niche, but they're not really providing much to the entire ecosystem. Like if you want to have cheap transactions, you probably go to Ethereum layer 2, where you would have, you know, Ethereum securing your underlying security. So like, I don't see it yet. You know, they do have connections in, I think MIT for Avalanche or something, and they're kind of like the preferred university chain or something like that. But it's still yet to be proven, right? And I just think, yes, against Ethereum, against Bitcoin, it still doesn't stand a chance. So it might carve out something very small, but it's going to be very small.
Mm.
Yeah, that's it. I think the next sort of major will be sort of interesting. Avalanche has got like their really like their most significant sort of event on at the start of May. So like if you're looking at the calendar of 2023, like this is Avalanche's like biggest one. So it's called Avalanche Summit. And that is starting in May the 3rd, and it's running for 3 days until May the 5th. So for people, you know, even like us, it could be worth checking to see, you know, hey, they've got over 300 speakers, over 125 panel sessions. You know, like what are they focusing on? Well, we know they're focused on gaming predominantly and DeFi, but like where are these things at, and how does Avalanche, you know, foresee itself distinguishing itself in the market and finding sort of product market fit in a way that, you know, Ethereum or Solana sort of isn't. So yeah, I think they've got a big, like their next major upgrade as well, like coming up like relatively soon, that they've been working on more or less since Avalanche went live on mainnet. So again, just a few things coming up there, and we'll continue to keep you updated for sure on any developments there. Cool. But yeah, just a reminder for members to post any questions in the comments. But yeah, we will wrap things up there for our public people listening to the recording on the podcasts and or watching on YouTube, these do come out like after, about 48 hours or so after they are recorded and streamed here live with members on what is Monday night now. So if you did want to see these live and enjoy the other benefits that members get at Collective Shift, you can visit our website at collectiveshift.io. And just a reminder, we do offer our strategy calls for 15 minutes. That available at collectiveshift.io/strategy. Thanks for tuning in.
Thank you guys. See you soon.